Since the beginning of this year, more than a dozen S&P 500 companies have either raised or reinstated their dividends. So that's been positive news for the markets. Joining us now is Dr. David Blitzer. He is director of the Index Committee at Standard & Poor's, and it's great to talk with you today.
Great to be here.
What's your view on dividends? How crucial are they? How important are they to investors?
To investors, they're very important. In difficult moments in the market, when you're worried about stock prices, dividends are not only very nice, but they provide a little bit of income, and that's quite pleasant. In fact, one thing we hear in the markets over the last several months to a year or two is everybody's looking for yield. They want something that pays them income. And when the markets go down, it's no surprise that the income-paying stocks tend to do well in those situations because they do give something, take a little of the tinge of annoyance or upset as stock prices fall. So it is important, and looking at the S&P 500, something in the order of 350 to 375 of the 500 companies pay dividends. So clearly from the corporate point of view, they're viewed as important as well.
How do investors segment their risk buckets?
Investors, when they deal with saving and investment, putting money away, whether it's for a rainy day or retirement, send their kids to college, go on an ocean voyage, buy a yacht or a second home, because they have that long list of things, they very often tend to think about the money in different spots. Some of the behavioral economists will call it mental accounting instead of risk buckets, but it amounts to the same thing. When they do that, something like money for the kids' college education or money for retirement, they want to have it very secure. They don't want a lot of risk. Taking an ocean voyage, that's a wonderful thing. They all want to do it, but you know, they'll accept a little more risk if it works out, or if the ship comes home, maybe you should say. They'll be happy and they'll go first class. And if it doesn't work out, well, they'll take a car trip instead or something like that.
Who's using dividend indexes right now?
One of the uses of it that we hear a lot about is in connection with trading other financial instruments, in particular options, because dividends and the rate at which dividends are available for an index has a big impact on the price of a lot of derivatives traded on that index. So if one looks at the S&P 500, the dividends on the 500 have an impact on the anticipated prices for options on the index itself. And so that's one area where it comes up. And in fact, in looking at dividends, looking at the dividend index that we calculate, we had very much considered its use in terms of adjusting or managing some of the risk inherent in options that are directly tied to dividends.
So what do you think about this new use that we're going to be having, and it's just started, and what kind of reaction do you think you're likely to get?
I think we will get some interest in it and people paying attention, and from some of the discussion I've recently had, people start off by saying, well, it's only a small part, does it really matter? And then I point out that completely inadvertently at S&P, the Index Committee ended up putting dividends right in front of everybody. Recently, Burlington Northern was acquired by Berkshire Hathaway. Burlington Northern had been paying dividends since it was acquired. It came out of the S&P 500. And after a good deal of consideration and analysis, we elected to put Berkshire Hathaway in as a replacement. Berkshire Hathaway does not pay dividends. That's a corporate decision that Warren Buffett and his board made many years ago, and they stick to it. It's also a rather large company. It's among the 30 or 40 largest in the S&P 500. So it has big weight in the index. The result of this is that while the first 2 months of this year, as you mentioned, have been very good months for dividend payments, the dividend yield on the S&P 500 after Berkshire Hathaway's entry turns out to be a lot lower than it was before, because we put in a non-dividend paying company, though I would add that shouldn't be considered an investment comment at all, because we don't make investment recommendations about any company we add or delete from the index. But we put in a non-dividend paying company with a big weight, and because the weight is properly considered in calculating the dividend index, the yield looks a little bit lower than I think most people expected a month ago.
Could you give us some more examples on the potential uses of dividend options?
I think just about anybody who is looking at dividend payments and the flow of dividends and recognizes that dividends are like any other financial time stream or cash flow, it looks wonderful but there's a risk, would want to be able to hedge it or take advantage of an ability to hedge it or control that risk if possible. So whether it's dividend capture strategies that people have used from time to time, especially some non-U.S. investors where the taxes are different, or it's just setting up a portfolio that's going to pay income, and the income is important. In any of those areas, being able to hedge the flow of dividends means that there's one more risk you can manage if you choose to, one more thing you don't have to worry about every night.
Thank you very much. Well, it's been wonderful speaking with you, Dr. David Blitzer. He is Director and Chairman of the S&P Index Committee.